Happy weekend, Maverick Currency traders. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the Trading Room. Let's talk about last week and get into the week ahead of us. In this session, we're going to go again through the past week. We're going to go through the Fed meeting, big moves off of the Fed. Then we're going to see what opportunities we have going forward. Both Ankit and I really like the Forex market at the moment. And this year has been not so great at times and then decent sometimes. I actually think it's actually really looking really good at this point. Let's first start off with equities. Equities rallied to new all-time highs, and all of them did. The Russell 2000 has been lagging this whole time, like for years. And the Russell 2000 this week officially just made new all-time highs. So every market is soaring. Every equity market across the world is reaching new all-time highs. The equity move is big. It's a real deal here. Now, the curious thing is all of this happened this week on a week that the dollar strengthened and bond yields surged. We got the FOMC meeting. They said they're cutting rates by 0.25%. And then it was a very curious thing because they have what's called the dot plot. And the dot plot they release, it basically says where they think the economy is going to be going over the next couple of years. They have a new governor on the board who's ultra dovish. President Trump put him there, and he's calling for like 5 rate cuts this year, or like, I shouldn't say this year, but 5 rate cuts like in the near term. Because of that projection, because of that ultra dovish projection, it actually pulled the dot plot down. It pulled all the dot plot averages where all the Fed governors were, basically saying, hey, we think there's 1 or 2. Now we got someone saying 5. You throw that into the average and that pulls the average down. So I think the market was celebrating that. It actually went down. And Ankit, you told me earlier about the odds of a rate cut in the next one. What are the odds on the Fed tool?
Hey, Rob. Well, surprisingly enough, the odds for a rate cut in the month of October is about 92%. And for the month of December is 80%. And again, these numbers have actually gone up since the FOMC meeting. So pretty surprising.
And if you listen to the press conference, he was not dovish. Powell was not dovish. And actually, I thought quite hawkish that there wasn't going to be as many rate cuts. So I think the equities have gotten ahead of themselves. I think they've been getting really excited. And I think the rest of the market, the bond market and the Forex market, which are more sophisticated markets, are kind of looking at that and being very skeptical. The crypto markets were basically range bound all week. Nothing going on in crypto. Let's take a look at some of the economic news. We got a CPI out of Canada, basically as expected, but it fell a little bit. The CAD has been untradeable for the most part. It just has not been moving anywhere. We got a really strong retail sales report out of the US. Look at those numbers, up 7.7%. And last month was revised higher. So the spending in the US continues. The consumer is strong enough. It's one of the big reasons why the equity markets keep going up, because these economic numbers are coming out and they're actually pretty decent. We heard from the Bank of Canada. They cut rates as expected. Again, nothing really changed. As I said, I really haven't looked at playing Canadian dollar in a very long time because it's just been so range bound. We already covered the Fed. We got news out of Australia and New Zealand. Weaker than expected numbers. And look at that GDP out of New Zealand. Almost down a full percent. This is a big miss here. And we saw the Kiwi weaken on that news. Then we got really weak employment out of Australia. These two currencies have been the darlings over the last month. They've had a great rally. I've been playing mostly Aussie and just loving it. And I kind of think this killed it. We'll take a look at the charts, but it kind of looks like this killed it. We got our third central bank meeting from the Bank of England, and they left rates as is, but we have one more dissenter. We have one more dissenter saying, all right, the next meeting is more likely to be a cut than not. As you can see here, we have really good economic news out of the US and kind of really bad news out of Australia, New Zealand. And that's really what we got last week on the economic front. What does that mean for the numbers? Let's go take a look at the final numbers. We had the S&P up 1%. The world markets lagging. So again, the US markets are outperforming again. The world markets have been outperforming this year, but just this week, definitely saw the world markets do better. Gold looks like it has reached a high again. We had a really long high base. We broke out and we either got a base or a pullback here. But gold to me still looks fairly bullish when you take a look at the chart. We can look at S&Ps. What is there to say here? We had a big run off the bottom. We had a very, very mild 1.5 day pullback into new highs. Now I want you to take a look at these candles. When you have candles like this here and this over here, this is a bunch of buying coming in the morning and then lasting all day long and closing at the high. As you could see, really this is our last day of real intraday buying. Everything else has been gaps. Gap up, gap down, gap up and fade. Gap up, hold, gap up, hold. Look, prices are still going up, but these aren't candles that are telling you a bunch of money's coming in. These big green candles are where they open it in the morning and people are buying all day long. You can see we're not getting a ton of buying here. That being said, it doesn't mean the market has to go down. The market can still keep gapping up and holding for as long as it wants. But I'm looking at this equity market and looking at this price action, and I'm not super excited about taking new positions here. Anka, what's your call on equities?
Well, I think equities right now, again, there's no signs of reversal yet. And at the same time, markets are been running for the last few months and sitting all-time highs. The way I'm looking at these markets, I'm just cautiously bullish because, there's definitely a lot of good news already priced in the markets. Now the question is that how far the markets can continue to run. So I am cautiously bullish on it. At the same time, if there's some sort of pullbacks in between, again, I won't be surprised. And that's stays in line with the overall chart pattern, which is still on the upside.
There's a famous saying in the markets, bull markets don't die of old age. They don't die of old age and they don't die because they've gone too high. That's not how they die. Until that happens, until there is something that kills it, the market is likely going to continue just moving higher. The big question is, at what velocity, at what pace? And I'm looking at this saying, okay, the pace and velocity are starting to slow a little bit. So I'm just not as bullish, but definitely still bullish. Let's take a look at the weekly returns on currencies. We did see the CAD pop 1%. We'll take a look at the chart. Has this moved out to where it's actually trending? The dollar here is my favorite currency. And we're going to talk about dollar quite a bit. But that being said, the euro and the Swiss franc are still going up. The yen is still going up. We saw all the selling over here in the Aussie and the Kiwi. So when you're taking a look at what to play, again, euro, Swiss franc, and dollar, I think still look good. And what are you playing against? Aussie, Kiwi. That's just where this market has been lately. Cryptos haven't really gone anywhere. Ethereum, that had been the superstar over the past month or two, lagged a little bit this last week. We'll see where it goes. Cryptos are definitely range bound at the moment. Let's get into the crypto market here. And this is what I was talking about. It's still bullish. Moving averages are still rising slightly. They're stacked up on top of each other. We like it when they're far apart here, showing big divergences. Okay, we've tightened up here, telling you, hey, don't expect big, strong trends. And you can see, okay, we can call this a little base here until it breaks out. Nothing to be too excited about. For me, I'm really not watching cryptos at the moment. Really not excited for any trades there. Here is the 10-year US government bond, and here is the date of the rate cut. There we go. You can see it ticked below 4% briefly. Take a look at where we are. We are 15 basis points higher than we were when the Fed cut rates. The bond market is taking the Fed as hawkish. The stock market thinks the Fed is dovish. Which one's going to win? They can both technically win. If people keep throwing money in stocks, the market will keep going up despite what the bond market thinks. We'll just have to wait and see what happens on this. Next week on the calendar, we don't have a whole lot. We've got German and European manufacturing. So if you're playing the euro, you probably want to be watching this. We do have Aussie CPI. If this comes out weak, it's probably going to really kill the Aussie. Like I said, the employment report kind of shot it a little bit. And if we get another one that's weak, then I think the Aussie probably is done running. We do hear from the Swiss National Bank. We hear from them every 3 months, and we can talk about them right now and then sleep right through the meeting. There's very little to talk about with the SNB at the moment. I don't think you really need to pay attention to it. On Friday, Canada has their GDP, but I think more importantly, we have the core PCE price index. This is the Fed's favorite inflation measure, and it's supposed to come in at 0.2%. If it comes in at 0.3, I don't think the market can ignore the rising inflation that the bond market is seeing and sniffing out. All right, so not a whole lot of news, but we have really good market activity, so I do think it's going to be a good trading week. Let's break it down by currency. I'm going to take cryptos first. Here's Bitcoin. Okay, we see Bitcoin. It has recovered back up above its 50-day moving average. That for me is the line in the sand. If it's above the 50-day moving average, I can be long. If it's not, I cannot be long. That's a rule that I've followed for 15 years, and it has saved me more times than I can count. Here we are. We're above the 50, but you can see we're basing here. It's mildly bullish, and I think ultimately you're going to get a break higher. When that happens, I just don't know. So I'm looking at this saying I want to see a little bit more before I even start to put some orders out there to buy breakouts. I'm not looking to buy breakouts here. Any breakout here, I'm going to watch and see what happens. I'll buy the pullback of the breakout, but I'm not going to buy the breakout here. Bitcoin Cash. This is why I said I'm not buying the breakouts, because I think this is what you're going to see. You're going to see lots of this over the next week or so in crypto, where we get this one-day breakout and then it plunges right back down into the base. I am not going to be sucked in to a false breakout because, again, everything that we like to see in crypto for a surge, it's not happening. It's not happening. The dollar's rising. Bond yields are rising. That's not conducive to a run in crypto. Ethereum, okay, really nice long high base. I like that. I like that quite a bit. Plus we have some rising lows. It's just timing. When is it going to pop? There's no signs that it's going to be this week. So this is why I'm not putting orders out there. I don't want to get triggered on a false breakout and then sit in a losing position while it bases. And you can see Litecoin here trading right at its moving averages. This automatically disqualifies it for me. As you can see, crypto, I don't really see any reason at all to be trading crypto. And I think if you're trying to buy breakouts, I think you're going to get hit with some false breakouts. If you want to trade crypto, I think what you want to do is you want to buy at the bottom of the bases. When it does fail and comes back down to the bottom of the base, okay, pick up some crypto at the bottom of the base. But other than that, I don't think there's anything to be had in crypto. Okay, take us through Forex, please.
Absolutely. Well, let's just start with our good almighty US dollar. And here we are, got a bit of a false breakdown, and we are back up to pretty much back to the support. I mean, we reclaimed that support that it broke early, and now we are right at those moving averages. So I think this is, again, good looking up nice for a bit of a case here that it's going to break out. So it's stalled exactly at those moving averages. And as you can see, that velocity remains strong. In the past few weeks, we have seen dollar, do well, but then that really doesn't last that long. I mean, take a look at velocity. Since that reversal that we had, we have pretty much gone up and up and up. I mean, we're just getting a one little pullback today. I think this is again a good opportunity for this, especially if this breaks out above. I do like to play that on the long side. So again, velocity chart, looking for some sort of consolidation or pullback to buy into. I think that trade from a risk to reward perspective makes sense. This year, this whole dollar kind of reminds me of last year, where the dollar did poorly in the summertime, and then we had a big reversal in the fall time, especially from October to December. Now, could that happen again? I mean, who knows? But based on what the FOMC is, the bond market is, we have definitely seen the expectations getting ahead of the actual bond market. So I think if those expectation comes down, that's just going to bolster the case for the dollar to stay strong. So going into next week, I'll be looking for more continuation pattern in the dollar to go to the upside. Now, on the other hand, we have the Japanese yen. As you can see, the Japanese yen is still, it didn't really break out higher or lower. We had a Bank of Japan this week, and that was pretty much a non-event. So I think overall, if you just take a look at how the yen has been moving, it has been selling off on rallies. So it still has those moving averages there. It rejected that level. I won't be surprised if it really rolls over from here. The trend score is still on -2. But I think the yen, I still like to sell on those rallies. And especially if the dollar stays strong, I think we could see a negative correlation there with the yen. Now, talking about some of the European currencies, and I'm actually going to take a look at some of these levels because this week we did notice certain currencies rejected that resistance. So Swiss franc is still holding it there. If it falls below this red candle for today, I think it's going to fall right back in the range. I know we have the Swiss bank meeting later this week, but I think just from a technical standpoint, I won't be surprised if this pulls back down to below that. So I'm not really keen on that, buying the Swiss franc here. But if it does breaks that support or prior resistance is now support, I think it can fall down towards those moving averages. Now, euro is on the other hand just stalled, as you can see. It just stalled exactly at that resistance. So again, what do we do when we take a look at ranges? We technically get some reversals around the support and resistance level. So I'm not saying that it's going to really break down, fall apart. I'm just saying this is, if you look at the range at the bottom and the top, it can easily fall down towards the bottom, and that's where those moving averages are acting as a support. Pound, on the other hand, already did that. You can see it's a great example. This is again one of the reasons why I'm not being a big fan of buying breakouts in these range bound conditions. As you can see, it got towards that and it just fell right below it. Now, if this falls below this today's or this week's low, I think we can easily see more further weakness. So remember, European currencies have done really well for the entire summer. So there's a little bit of a froth there. Now, if we get a rotation where money flows into the dollar, which hasn't been the case for the last few months, pretty much since April, we have seen the dollar kind of go sideways. I think if the dollar picks up, there's a lot of other currencies that could pull back. As you can see from the velocity standpoint, we pretty much down since Wednesday and is now closing on the candle for the lows of the week. So this is again, I think they are setting up nicely for a short going next week. Now, when we take a look at a surprise, I mean, take a look at CAD. And I know when you look at the chart, you kind of left like scratching your head, like what happened here? We have Bank of Canada that they cut rates. They had terrible report, the employment data. Even the retail sales data came out today was terrible. So why is the Canadian dollar rallying? Well, this is $1 million question, but we talk about how how the dollar and the CAD are kind of correlated for a lot of times. As you can see, this time, I mean, we're noticing CAD actually doing a lot better than the dollar. But you can see this one is also running into that resistance of 250-day moving average. At this point, I think this CAD likely to stay elevated, or if the dollar stays strong, we might see CAD stay strong. One of the things I always say is that if there's every reason for the currency to go down and it goes up, now that's something you have to take that with a grain of salt and say, well, maybe this is, maybe that was already priced in. So I think this price action this week in CAD looks a little promising as far as the reversal goes. Now, where is the weakness? I mean, here's the Aussie, and I know when you take a look at daily chart, you'll say, well, this is just a pullback. And again, this could be just a pullback. We'll find out. We have that prior resistance is now the support. So this is again another currency that where the froth was, because I mean, take a look at that run we had from mid-August to where we are. It has stayed strong. So if that CPI data comes out a little weaker, I will be surprised this retest this prior support, prior resistance now support as well. So this Swiss franc, and here we are with the Aussie. They kind of at that level where it could either fall below And I think the retest on that support will be the key here. And then here we are with the Kiwi. I mean, that is a perfect, we call a rollover. I mean, I almost changed the outlook last week on this Kiwi because Kiwi, almost got above that 50-day moving average. I mean, it raised that big move that we had back in August. Here we are. Not only it fell on the news, I mean, but take a look at the follow through. It just stayed weak for the most part. So on a velocity chart, it's just setting up for a nice little low base pattern. That's a beautiful low base pattern. And even the daily chart is breaking lower. I think Kiwi definitely has a rough road ahead of it. I think that's where probably some of the weakness will be. Continuing to short on those rallies, I think Kiwi likely to underperform. And like I said, especially if the dollar stays strong, dollar will weigh down on a lot of the currencies if that rotation, continues to take place next week. Back to you, Rob.
Great analysis, Ankit. All right, so here is where we sit on our daily chart trend scores. We're going to point out, Aussie and Swiss franc are the only two currency crosses that have broken out to new highs over the last month. And they both are in a little bit of pullbacks. I think this week we're going to be able to answer the question of, is it just a pullback or is it something bigger? We've got the SNB for the Swiss franc and we've got the CPI for the Aussie. I think if those reports come out decent, I think you can go back to being long, especially Swiss franc. I like long Swiss franc better than long Aussie. Euro is hitting right up against that resistance. We need to see a little bit more. And you already heard my opinion on crypto. So looking at everything strong on the trend score, I don't love any of it. Now, here's what I do love. I love short Kiwi and I love short yen. I think both of these trades are dynamite trades. The question is, what are you going to pair them up against? What's happening on velocity, a little bit shorter term? We got the dollar and CAD is where all the buying is at the moment. And the yen is holding up a little bit, but the Kiwi is extremely weak. I am personally going to be looking at dollar yen. That to me is going to be my favorite trade. I hit the dollar yen this week. It was a great trade. I know a lot of the traders in the Discord talk about hitting euro dollar short, dollar yen long. We had a great week this week as a firm. So let's keep that momentum going and let's keep hunting in those same places because that's where the momentum is at the moment. I'm going to take a look at dollar yen. Now, we've talked about dollar yen, and dollar yen has been virtually sideways for a long time. But the range that it's sideways in is large enough to where we can play it. I mean, it's been going from 146.50 up to 148.50. That's a 200 pip range, and you can see it's been great places to get short, great places to get long. And again, all these little lower shadows. I mean, look at all these little lower shadows to get in and get long on this. Again, this one was definitely very extreme with the FOMC meeting. The same thing here. We're up at the top of the range. So at this point, technically speaking, for me to think it's going higher would be me smoking hopium, me talking myself into, hey, I'm smarter than the market. I'm smarter than this range. I think it's going to break out this week. Now, look, I can have that as a premise. I can have that as, hey, I think this is going to happen. But I'm not going to act on that. I can't act on it until it actually happens. So, how do we know when it's a true breakout? Well, let's take a look at some of the other breakouts. I'm going to need to see a clear break of the line, and then I need to see a candle hold it. I need to see a candle hold above the line, at least a daily candle, for me to be convinced that there is a true breakout. You can see it didn't happen here. It didn't happen here. This is the one I like the best, but to me, I just can't go long here because of technicals. Now, this is where old Rob is a much better trader than young Rob, because young Rob thought he was smart. And he said, Rob, you're smarter than the market. You can figure this out. Of course, you think the dollar's going to go up, the yen's going to go down. Why would you not buy it here in anticipation of the breakout and run? I mean, I think it's going to go up to 151. Why wouldn't you get it here? And so as a young trader, I'd make that trade. Now I'm saying, hey, you know what? I'll make the trade here. I'll make the trade at 149.50. That's a much better trade than right here. And I know young traders say, What? What are you talking about? It's better to get in here. Here's the point. You could have easily made that case here and here. You could have easily done it, and it would have turned into a loss. I'm willing to wait to get some confirmation on this for a breakout. This is my number one trade here, dollar yen, but I just can't take it. Second trade here, Euro Kiwi. Here's a Euro Kiwi on a daily chart, and you can see this one is much, much better. It's a much more clear trend, much better setup, and it's currently running. It currently has some momentum. We've got clear skies above on the daily chart. We got very clear skies ahead on the daily chart. So the matter is, where's the entry? And you can see we've got a 4-hour chart here, high base. I like this one. Buy it at just under 201. So like 2009 is really kind of where I want to be. You know, we do have this little upper shadow here. I'm okay. I'm okay buying a breakout on this one. This is, to me, just fine. If you want, take a half position, and then if it sinks back down, you can take another half position later and improve your cost basis. Those are my two favorite trades: Euro Kiwi and dollar yen. But dollar yen needs to show me something first. Ankit, what are your favorite trades this week?
Hey, Rob. Well, I think any of the dollar pairs are what I'm really watching for this week. Now, the big question is what other currencies going to be moving and what will be the better pairing with? First thing, let's just take a look at the weekly chart on the dollar because this is where, I talked about this briefly in our current midweek currency room. And when we looked at this level, I said, hey, we are so close to that support area, which has been very predictable on reversals for the last, especially last 3 years. You can see that this is exactly where we were last September. This is exactly where we were at the end of 2023. Now the question is the history going to repeat itself? Now, we always talk about risk to reward, and we talk about where we are. So we discussed where the Fed is and how the economic outlook is now. I think as the economic numbers are getting better, and if they continue to get better, again, I won't be surprised that the dollar do pick up. And if that's the case, then the question will be: is that going to be a multi-week run? Because in the past, when we reversed from that level, we had multi-week run, which was again just a great long trade to be in. Now, this week candle, it's a start. But we still have a bit of follow through to look for going to next week. So I'm paying close attention to the dollar. So what pairings would it be looking good? Again, we already know Kiwi dollar is pretty weak, but this is where you can actually go down the list and take a look at, okay, what's the level where we are at, what's the risk to reward, and most of those dollar pairs, I would think they kind of looks the same today or this week, where they're just sitting at the lows of the day. Same thing. We looked at some of these, European currencies. Here we are with the pound dollar. You can see that has given up that support very nicely. It reversed off the resistance and it just went down. So I think as we take a look at even a 4-hour chart, I think those will be a good time frame to kind of look and set up your charts at, because daily is already telling us that the momentum is shifting. Now we need to find some good setups, and I'm looking for those bases, bear rallies to short into. Euro dollar, I know I had an early, good trade early this week. Euro is sitting at the top of that, with the range there. And if this is, this is the one that I was closely watching. That 118.10 was a good level. With that prior resistance was the new support, and he gave back pretty quickly. Again, now when we go on a 4-hour chart, we'll see is that it's still in a falling pattern, and he is still just making new lower lows. So I still like, so all these dollar crosses. I mean, here's another one, dollar Swiss franc. I know next week we have the Swiss National Bank, but I mean, take a look at this one too. When we start, Rob, like start with a weekly chart, because this is one looks very interesting on a weekly as well. Because I mean, take a look at these candles on a weekly. I mean, we are first of all at these lowest level that we have seen. Now, I mean, we had a very nice retest of that, very big support. and which ending with a pretty nice little doji candle here, or a little hammer candle. So I think this could easily turn around as the momentum picks up. Now, when we go on to the daily chart, you'll notice that we are still far away from the 20, and we're right at that, the turning point there. Now, when we go into the 4-hour chart, well, what do we see? We see a bit of a continuation. I mean, this is what I like here is that we are above the exponential moving average. We got above it and we stayed above it. Now, that's a good sign because, if you look in the past, we have been very consistently staying below that level. So whenever you get this little reversal, I think this time around, especially, we need to see any gathering energy or going sideways for a little bit, and then break out off of it. I think risk to reward ratio on that looks pretty good to me here. So as you can see, you can do all your analysis on all the dollar crosses, and they all kind of looks the same. So I agree with you, Rob. Dollar yen probably be on the top of my list for a breakout above that 148.20 area. But I'm also open to other currency pairs as well. They all look very similar. I think the last one we haven't looked at is Aussie dollar. So let's just take a look at that one as well.
Well,
And
okay,
we'll
let
see
me
the
jump in and just point
yeah.
one thing out here. When you take a look at, it's back here, we broke out above the 13 EMA and we held it. But take a look at the RSI. The RSI really never got above 50. It just never really got above 50. This move is clearly so much stronger. So much stronger. It doesn't mean it's a guarantee that it's going to move out, but this breakout without it being above the RSI 50 to me would be a little bit of a red flag. This breakout with it going above the RSI 50 and then going all the way up to 65, that to me tells you this little breakout above the moving average is much stronger than the one in the past. I like this trade much better.
Yeah, no, I agree. And thanks for pointing that out. That's a very good point. And here we are with the other chart on Aussie dollar. And like I said, they all look very similar. So, it's important to pick the right currency, which is the dollar this week. And it doesn't matter what you pair with. You end up with probably good gains. That's really where we are at. We're looking for, like I said, sideways pattern, looking for a base or looking for a little bear rally to short into. But I'm definitely looking for that continuation of that, what we saw this week. Back to you, Rob.
I wish you could all hear some of the debates, the fierce debates Ankit and I have had over the years. We don't always agree, and sometimes we vehemently disagree on our market takes. But it looks like here we're both in agreement. We both do like dollar long here this week. I think it's going to be a good trade. I would love to see a little bit of a pullback early in the week. Just take a little bit of that pressure off and then a resumption of the rally. That to me would be my favorite trade. Is a big pullback on Monday, Tuesday, and then strengthens on Wednesday and ride it through the rest of the week. Thank you so much for joining us. Everyone have a great weekend. Goodbye, everyone. Ending.